Good afternoon. Welcome to Chicago, Future of Finance. I'm Oliver Rennick. 2 p.m. here roughly, means an hour left in the trading session. The stocks are holding in. Boy, oh boy, am I feeling good about my risk radar right now. The whole theme of this has been yellow on stocks, but red on crypto. MicroStrategy, I like to call it Michael's strategy because I can't get rid of the M, is just getting blasted right now. You've got a major sell-off in the stock, down 10%. You've also got Bitcoin getting dragged with it too. The main trade I've talked about all year is long Bitcoin, short master. I have to say I've been tweaking that a little bit lately to shift it more towards stocks, long SMH, short master. It's basically the gift that keeps on giving. Bonds, dollar, and gold, maybe we'll find an answer for soon, but the charts right now just do not look great for the crypto bulls. That being said, it might just be off in a world of its own. What would be really good is if equities can continue to hold the strength that they've had relative to crypto. I do think that's one of the most important things. Let's look at the chart here for crypto first. BTC falling off the map, down 4.5%. Obviously that's an issue, but look at SMH. Look at the semiconductors right now holding with NVIDIA earnings tonight. This is such a big deal. And NVIDIA looking pretty good. You can see SMH still trading within the range that I've been watching for some time in this all-important sector, which of course is the core of the equity market. NVIDIA right now up 2.5%, holding on to 180 bucks. That line I drew on the show yesterday, important to see that holding as well. Got a good show coming up. Going to have Brent Kochuba from SpotGamma joining me alongside Jon Najarian. We're going to be looking at Kalshi, what it says about NVIDIA, as well as the macro backdrop. Looks like we're not going to get October jobs data. Maybe that's an okay thing if you're worried about the state of the economy. Stocks holding in right now because we know just how important this event is tonight. That's really the clutch thing here, is that NVIDIA has so much riding on it, both in terms of narrative for AI and of course also in terms of the options and the premium that's been built up going into this report. Mr. Kochuba joins me here this afternoon from SpotGamma. Brent, tell me about how important this report is this afternoon.
We face the end of the known world, I suppose, as everyone's paraphrasing this thing. I think the thing that I find interesting about this is it's the flows that are triggered by the event itself that are really going to move markets. And to me, volatility seems a bit underpriced, if I'm being honest about this, particularly in NVIDIA. NVIDIA is pricing in somewhere around a 6 to 7% move. Very average implied vol, I would say, for going into an earnings event. There's not a real skew to it, but what seems to be arguably underpricing things, I think, is S&P vol, particularly on the short side. And the reason I state this is because I think if NVIDIA misses, for example, we can all pretty much look to the downside, right? And when you look at the downside, we got nothing but negative gamma down to 63.50 is where I would mark it. So I think an NVIDIA miss opens 6,500 in very quick order, very short order. And then you look at the 63.50 area, 23,000 roughly in the NDX, as an area where the positioning of the market maybe becomes a little bit more supportive. And that probably means something like VIX 30 in that downside scenario. So that's about a 5% move, with the VIX currently implying about a 1.5% move based on current prices. So that's the downside. And then you start to look at the upside, and there's a clear path here to 6,800 and ultimately 7,000. I think there's a ton of open interest up there at 7,000 still. And if you remember last week, Oliver, we were talking about the 6,800 level as this important risk-off level. We broke that level and then had this big kind of spill to 6,600-ish. We recapture that level, then I think 7,000 becomes the key thing here. But ultimately, what happens if NVIDIA meets or beats, right? Vol comes for sale, and we look at Thanksgiving, because Thanksgiving is this big holiday, half day on Friday. Everyone's just going to breathe a sigh of relief. If you're in Oracle puts or some of these other AI puts, what are you looking for at this point? Those stocks are down 20%, CoreWeave's down 40%. A lot of these drone names you're looking at them before, these kind of speculative names, robotics, et cetera, that were so big just a month ago, they've had massive sell-offs at this point. So you need something incremental to the downside story on the AI front to justify holding put positions through not only the weekend, but you also have OPEX here on Friday, which is a pretty put-heavy OPEX. And then obviously that weekend. And then eyes will turn very squarely to mid-December, which is FOMC and Oracle earnings right after that. So I think that you really have to have NVIDIA make an addition to the downside narrative at this point. Even if they just eat and the market's kind of ho-hum after, that vol, that short-dated vol should still come for sale, which buoys the market a bit. I'd also point to Google. Google's over 300 today, or at least it was last time I checked, a little bit under that now. You know, that's
Google's been a big leader. Google, by the way, is so important, Brent. Sorry to jump in, but that was my stock of the week last week. Here's the Google chart, and part of the reason for why is because Kalshi's current survey of the best AI at the end of the year is Gemini. And so if you think that AI is the core story, which I know we both do, then you've got a pretty good reason, to think that Alphabet is the stock to watch right now as the main leader.
Yeah. It's a great point. There's some other names like Eli Lilly's moving a lot today. So there are some green shoots here. Again, but all that goes away if NVIDIA misses. The second dynamic here, which is adding to the confusion, obviously, is the rate situation, which we've been talking about here as well. FOMC minutes came out today. There's still this 50-50 shot at a cut or not. And so, that is this other narrative that is lurking in the background. But I just think because we have NVIDIA today, OPEX Friday, and then you're going to head into the weekend, that people are going to worry about the rate cut situation when they come back from Thanksgiving, giving this a little window of bullishness. Now, I would also add that those of you kind of doubting the impact of options flow may have noted this morning was VIX expiration, 9:30 a.m. Eastern time. The cash open is when those VIX positions all expire. In November, there's a massive 1% rally in the S&P right as the cash market opened. That faded rather violently. I bring this up for two reasons. Number one, it shows the full impact. But number two, we've already had like 2 to 3 moves of 1% today. We've already realized that many 1% moves. Yeah. So 6 at 24 is implying a 1.5% move. If you look at the S&P term structure out next week, it's implying roughly 1% move. So I just think that the options market here is a little bit underpriced for what can come out of this. And that works for kind of explosive upside as well as downside. I really am looking at it, in short order, 6,800 the test to the upside, and then that 6,350 is the downside level that we all need to watch.
To your point, today it's already, there's been some action here looking at the session so far. Obviously, you yesterday told us about the potential for swings generally in both directions for the market, and I think that's a really good point. We're wandering 100 points easily right now in the S&P 500 throughout the session. So, and I think that's kind of maybe a predecessor for what we should expect tomorrow and into the weekend too. I mean, I would be very surprised based on what you've been telling us and just kind of my gut of knowing what matters to the market that we don't have a swing bigger than 1%. I'd be quite surprised. I mean, VIX we're at 24 right now.
Yeah, and there again is these reflexive flows. You talk about levered ETFs, and 35% of the indices are the AI-related names, right? The vol is built up, and the reflexive flows are there. And if you look at what happens if you get a 1% move in vol, well, that's like $20 billion of the S&P delta that's got to trade just based on that. So there's plenty of flows here that's enough to drive the market. And I think ultimately what people want here is just permission to go and have Thanksgiving, right? And if NVIDIA is just fine, then suddenly the narrative is like, all right, it is all right, and that's a December problem maybe, as opposed to now. And again, CoreWeave, for example, is down 40%. What has to happen for that stock to have to go down even more than that at this point? You really need a destruction of the AI narrative in some kind of formidable way. So
yeah, the onus is on the bears to prove an anti-AI story.
I think so. And the unknown with that, obviously, is this whole rate issue with, are we going to have a rate cut or not? We talk about crypto and how weak that is and MicroStrategy really falling apart. Gold was threatening to turn over. It seems like it's finding a little bit better of a bid right now. So, the other asset classes moving seem to have subsided a little bit. The other funny thing about this is we're only 3%, 2 to 3% from where we were, Oliver, a week ago, right?
Not far, yeah, not far at all.
If you look at the amount of vol we had in October, we went from near all-time high to below here. So we had about a 5% swing down, a 5% swing back up by October OPEX. We then dropped into November and then rallied again about 5% right at the start of November. So these 5% swings have been just par for the course over the last month. And So the idea that we would have a lower volatility move out of this event and OPEX, which is going to clear out a lot of puts, just doesn't seem quite right with me. So, the idea here, or the first sort of thing that I can see, because I don't know which way NVIDIA is going to go or how the reaction to it will be, is that vol just seems a bit underpriced for the potential of what's happening. Again, a lot of this too is going to be driven by OPEX Friday and then that Thanksgiving holiday, which, who wants to own expensive puts through that holiday, right? It's just generally something you want to avoid doing unless you're really forced to.
I'm looking at your term structure on your volatility dashboard right now, and it seems like it pretty steadily decreases after after tonight. But then, to your point, it has kind of another drop off once you get into December 1st.
That's exactly right. And what I would expect to see if NVIDIA is fine is anything that expires before, call it December 10th, which we have FOMC, Oracle earnings, and then we have a giant December OPEX. You would think that vol would start to decline pretty sharply. And Oliver, if you click on that big term structure right there, the term structure is pretty flat today, right? And I would expect that front end of the curve, meaning the VIX index and meaning the front month VIX future, to start to really sell off if NVIDIA earnings are fine. And that's just a signal of Vanna as a flow to help support the market. Right? So there is enough richness in vol now that you can sell it for pretty good risk reward, particularly over the holiday. So again, I just think we really need something bad to happen tonight for the bears to have a lot of fuel or a lot of narrative.
Bears need something, because look, to your point, I mean, I think that everything that we've been talking about from our kind of different perspectives are frankly coming together really nicely today for anybody who's been watching. You've been telling us that this was the week and the day for volatility to kind of get its direction. So we should be hoping to get that over the next 2 days, right, to see if the market can get through all this options premium built up. You've also been talking about how a lot of the weakness has looked like more systematic kind of hedging than real downside momentum. And then my point has been, if you are worried about risk off of any form, you've got the freebie trade to just short master, and you can go along whatever you want, because if we're going to extract any froth from the market, I think everybody knows that's the place to start, this giant pyramid of Bitcoin debt. So now I've kind of tweaked my long Bitcoin short master to just long stocks or long risk short master. So I think a lot of these things are coming together, to your point, because crypto has not been able to take down stocks. It can't do it today, and I love to see that.
Yeah, and the Bitcoin volume, IBIT, right, which was such a large source of options flow, really yesterday and today has picked up substantially. It is below 89. It's looking pretty weak. I don't know what happened if MicroStrategy comes in and has to start liquidating. I don't know anything about that. Obviously, that would be a big source of selling. But the crypto complex, which was dead, seems to be catching a little bit of a sign of life here via the options flows. So I think that matters. The other thing that I think is, pretty
IBIT still has a lot of options volume, Brent. I'm just pulling up your tape right now.
Yeah. 1.1 million contracts is a lot, right, for that asset class, and it had disappeared until really yesterday, and it was a top 10 volume yesterday. So, that to me is significant. The other thing to note here is the positioning in the single stock space is a lot of positive gamma. If you look at NVIDIA, Tesla, Apple, etc., it looks like traders are generally short puts. When I say traders, I mean hedge funds and retail are generally short puts, kind of short calls. They're not positioned for a ton of risk here. So I don't get the sense in positioning that people are positioned for the capitulation washout kind of situation here, right? And so the risk there is that NVIDIA messes everything up and you got to go from being short puts to long puts, and then that drives a lot of vol. But, narratives aside, how are people positioned? It's kind of benign positioning in the single stock space, at a minimum. And then you have to add in all this, the prevalence of zero ET and leveraged ETFs and all that sort of stuff where people love to chase, right? And if this turns into in hindsight, obvious buy the dip moment, a lot of people are going to chase, right? Upside calls, right. That kind of thing.
That's very important. That's what you were mentioning yesterday, where you could easily see this become a big, big move. If they blow it out of the park, obviously it cuts the other way too. If people got to, chase to the downside, but right now the market is showing some confidence ahead of this. I got your hero page up for NVIDIA right now. Tell me what we should glean from this if you're trading options, if you're getting ready for this report today.
Yep, purple line there going up tells us that today people are buying calls and or selling puts, a pretty decent size. You can see the 30-day range there on the right is about $1 to $2 billion for NVIDIA. So $630 million is a fair amount of positive flow into NVIDIA. And what that is really saying is obviously probably some short covering, I'll imagine, before earnings. Again, 6 to 7% implied earnings move for NVIDIA is not much considering the stock is down, 5%, or at least it wasn't today.
Yeah, and we've seen all these do big moves like that before.
Big moves. And one of the trades I was looking at I thought was interesting on this trade was if you look at the positioning, the Qs, for example, QQQ, people are into puts. They're definitely looking at puts or more positioned into puts in the QQQs, and that call skew is pretty light. So you can do a 1x3 in December, which is selling the at the monies and then buying something like 3 of the 25 delta calls for even money, which is quite a trade for upside convexity. And I just think it speaks to how the skew is sort of tilted right now in the index side to puts, and that would unwind and shift if, again, NVIDIA earnings are all right. So, there is the shifting of flows, one side of the boat to the other as sort of like the water sloshes around in a boat, if you can imagine that narrative, and that can drive, again, a lot of these interesting flows.
The Q's behavior kind of looks similar in terms of options volume to NVIDIA, obviously, so I think we kind of know which index is going to be the juicy one tomorrow.
Yeah, 100%. S&P as a whole has had a little bit more of a negative gamma complex today, but the VIX expiration, was such a funny way to open the day because you clear out all these VIX positions, you get a 1% rally to 6,700, and then that just gets smacked down. So there was a lot of just this VIX volume reset, I think, that happened this morning, and then the FOMC minutes were, a little ugly. So that's all being digested. But look, again, the problem is, and I think the core sort of thing that I'm ratcheting onto is right now you own mildly expensive vol if you're long options, if you're long, the VIX futures or puts. Those are going to burn a hole in your pocket unless there's some pretty sharp downside tomorrow into the next day. And you can hedge out that downside with put flies with 1 DTE or 2 DD in the SPX or the Qs for pretty cheap. In fact, I was just looking at a Dow DIA, whoever trades that, right? But, there's a 10% wide Dow put fly for 1121 for 30 cents, for example. So there are these cheap little, and I want to call them freebies, but they're very cheap ways to hedge out these short-term moves. And I just think that it is a risk here that if you own puts and the narrative is upset, that those puts are going to be on fire sale into the weekend, knowing that people just want to go home and have their turkey, right? So that's the risk for bears.
So it should be, all this points to a fun 48-hour session 2 days into the end of the week. I also kind of wonder possibly that maybe a pain point for some would be if there is no move, if all the straddles and strangles just go to 0-2, right? Sometimes that's kind of a thing worth talking about is, it's like if you own the stock, okay, you're neutral, fine. But if you're really speculating in the options realm and there's no move and you're in a 0 DTE or something, then you could get cooked.
Yeah. You're 100% right about that. And when I talk about narratives here and I'm like, well, I think the vol move is underpriced, I'm always like, what is the hole in my narrative? Is it if stocks do nothing? And here's my problem with the do nothing narrative is VIX is at 23, 24. We also have a big options expiration here and then Thanksgiving. So what does all that mean? Time decay is a big problem here when vol's this high and we're heading into a weekend. And a bunch of puts have to get exchanged, right, on Friday because of expiration. So if we just sit here and do nothing, then owning puts while we're doing nothing is not fun, right? That time decay is burning. And what does that do? That invokes flows, right? That should start to buy the dip and that can start the machine moving up. So I think it's very hard for the market to just sit here and do nothing after earnings because VIX is at 24. If VIX is at 14, then you go, okay, we could just do nothing. That's totally viable. Right. And if there's no expiration, that's totally viable. And we don't have a holiday weekend coming up, totally viable. But you add up all those things, and I just think that means that the ball's got to start rolling in one direction or the other. And there's a lot of interesting trades, I think, to express that, unexpected level of volatility that I think we're going to get.
Looking at VIX, right? Go
on this
ahead,
point,
man.
We're up 1% since we started talking. I mean, it's just it's pretty wild, the intraday moves.
Seriously, look at NVIDIA right now. 186, 187. So they're really trying to, get this thing rolling before the number is even out. That kind of makes me, makes me excited because it means that, folks are trying to get bulled up in the middle of a crypto sell-off. They're really trying to put a lot of faith in the AI thing, which I think is largely deserving. But it also just, I think, again, not to talk outside both sides of my mouth, but I think the probability of it is low, but if there's a big miss and crypto's already getting crushed and risk coming off there, then that would not be a good scenario over the next 2 days if NVIDIA misses. I don't think safe to say.
Yeah, and I think the problem's going to be is like, does NVIDIA miss? No, but it is sort of like what happens in the conference call? What's the narrative coming out of the call?
Yeah.
Is AI, CapEx spend still there? Some of these things are not going to be obvious to somebody like myself who is not a fundamental guy. And so, I'm going to tread lightly until probably 4:30 or 4:45. Like, make sure the earnings call is done and that, okay, like what is the trend that is setting up here? Because I think all of us believe that NVIDIA earnings will probably be, from a dollars and cents perspective, in line, but what is the narrative that is established out of this? If everything is all right, then you look at Oracle and these expensive, these credit default swaps that are flying off the shelves and getting bid up, right? For example, that's been a source of equity put buying in CoreWeave and Oracle and some of these other names. And so, does that alleviate as soon as the narrative is sort of reset, right? And that's a certain possibility or a key thing to watch. So, I think it's the narrative that matters. I don't know that the actual EPS is what people are even necessarily care about here at this moment. And then adding on to this is there or is there not going to be a jobs report for tomorrow? I think now that's canceled, Oliver. I haven't checked.
Seems like no. By the way, on NVIDIA for the Trump and tariffs for that stuff, that the market basically on Kalshi right now is a coin flip, on what they're going to talk about. So to your point about the conference call, I'm not sure there's a lot of high conviction right now.
Yeah, and I think if the capex if the capex is there and the demand is there and that narrative is still fine, then I think then again, in terms of the vol selling, you just really need something that says like, look, there's a reason to believe that this is all sort of falling apart based on recent things I've heard Jensen Huang say. It doesn't seem like he's going to fade on the AI hope at all here. He very recently was saying that there's a lot of increased demand that's setting up. So I certainly don't know, and nor do I feel like I need to guess, because I think whatever way this market starts to tip out of the earnings call, is probably going to be a fairly extended direction. And, the levels, I think the key support and resistance levels are 3 to 5% away from here. So, there's plenty of room to sort of wait and see and then, leaning into the prevailing direction.
Okay. Reason to believe. That's what we're going to call the NVIDIA earnings. I think right now, Brent, is giving people a reason to believe, which I know there's a Bruce Springsteen reason to believe, but I guess it's also originally it's a Rod Stewart jam, apparently, according to Wikipedia. So
you learn something new every day.
Tim Hardin originally.
I got to give you a high five on how quickly you pulled that up. Your production skills are really getting better there.
Thanks, appreciate that, Brent. We're working hard here. Okay, I think it was popularized by Rod Stewart. I know the boss version, but reason to believe. We'll see if NVIDIA gives us one tonight. Thank you, Brent.
Oliver, I would just say what I think of is Princess Leia when she says, "Obi-Wan Kenobi, you're my last hope." Pelvis. That's it. Jensen Huang, you're my last hope. So
if Obi-Wan had a leather jacket, which I think he's still rocking.
We need an update.
Right?
We need a Star Wars update.
Yeah. All right. Great stuff, Brent. Great prep. I feel like much of what we've talked about has been leading up into this afternoon with all the volatility analysis going into this. Thank you very much, sir.
Good luck to
pleasure
us.
As always. Yeah, thanks. Brent Kochuba, SpotGamma. Always a pleasure. Time for the Innovator Buffer break. We'll be back. I'm going to go through the risk radar and a few things I'm watching, and then we're going to talk about some income strategies around big tech. We'll be right back. Welcome back to Chicago Future of Finance. A few key charts to add on to our conversation with Brent there before we get into a discussion about using options and ETFs on the big tech stuff. To key in on a few other items that we didn't really hit, Brent did touch on a little bit, but very importantly, one of them is that there's not a lot of direction in bonds and the dollar right now. That could be a bit of a sleeper story if you look at some of the charts, considering that risk off is prevalent in crypto, but risk on is very much present in stocks. You kind of look for the other stuff then to maybe give you an answer, but I'm not sure we're getting it right now. Here's the chart of bonds. You've got the long-term uptrend line that looks pretty good for Treasury bulls to continue to hold on. But that being said, there's a possible risk here that if you do get any surprise on the economic data or the Fed, then you've got another complication. That being said, I really just don't think the market is too concerned necessarily about some of the complications with the Fed right now. That's because generally, unless you are given clear evidence and the need to cut rates, then you kind of just assume that you will have the status quo, and largely the status quo has been solid. That's because when you're not in a need to hike, then the default kind of goes to the cuts. That being said, do we need the cuts? I don't really think so. It could be an added bonus, but I think this is still largely a backstory for the market. The macro stuff is taking back seat to the tech stuff. That's where, again, the chart of SMH is so crucial. We're now up 2% to Brent's point. Finding an intraday rally here is a pretty big deal. Shows a lot of confidence going into the earnings tonight and then the session going into a weekend ahead of the holiday, which could mean a little bit of lighter trading. And sometimes in those events of lighter trading, you do get a little bit of swingier markets. That's where the VIX is telling us to basically be ready at 23 right now, saying look for a move. Now, if you're thinking about macro and the stuff around the edges, I also just want to point out the dollar as well. The chart for the greenback is picking up some momentum. This, to me, is a little bit of a sleeper story. Really solid move in the dollar today, up 60 bips. It's notable that this is happening while crypto is under pressure because the dollar has been very weak all year. But now if you look at basically the last kind of 6 months, you're getting somewhat of possibly maybe like a cup and handle situation going on the chart. If the dollar does start to break out, then I think you might have to revisit some of your overall macro assumptions for the market. But that's a conversation perhaps for Friday or for next week. I think right now, generally, the most important thing to realize is that NVIDIA really carries the torch and remains the most important thing in the market. Now, if something goes wrong, then obviously you're under a serious degree of pressure if you break down, let's say, through 180. But generally, 180 is held quite well. So that part I'm feeling pretty confident about. So we'll see. Tonight's the big night. Gold is also holding in. That's why gold's been green on my risk radar. One of the few things that actually has been holding the green light, because you can see we put in a higher low here just within the past month. It's not saying a ton, but at least it tells us that gold is doing something unique right now, which is holding on to its general uptrend despite having a lower high. You do have the higher low, and I think that's a pretty good sign for gold. So that's the risk radar. That's the macro take. We're going to talk some ETFs here. We're also going to take a look at income strategies and options, which are very important right now in this market. It's time for the Cboe exchange traded profile, and today we're going to be talking about TDAQ. Joining me, Katara is the founder and CEO at TappAlpha on the Zoom. Sai, thanks for joining us. How you doing, sir?
Oliver, great to see you again. Thanks so much for having me.
So tell me about how you're thinking about NVIDIA. Obviously, when you think about tech, and this is a pretty fun conversation because your guys' fund TDAQ is an income-based ETF on, of course, the Qs, which are based on the NASDAQ 100, but you're Cboe listed. So this is like a nice little marriage of all these different financial players. Tell me what tonight and this afternoon means for the way you think about tech, and then we'll kind of get into some of the specifics of the fund and your strategy.
It's kind of the perfect storm, actually, to be on the show today for two reasons. Number one, are we having fun yet with the volatility today? Are you watching?
It is. Yeah, we are. We're having fun. VIX 24, baby. You know, this is why we get up in the morning.
That's right. I love it. But it was interesting hearing your prior guest too, because being on the sell side is very different than being on the buy side of options. And so that's kind of one of the key things with the strategy that we put in place with TDAQ was selling options in order to harvest premiums. And guess what? When volatility is up, so are option premiums. So today is a great day to be on the option sell side. The second thing too, you kind of opened the discussion with NVIDIA. NVIDIA's earnings are after market. One of the special sauces that we have in TDAQ itself and all of our option strategies is using short dated options. So we use true 0 DTE options. Why that matters is because we own the Qs, physical shares of QQQ. And our option position is only in play for the 6.5 hours of the trading day. So when the bell rings, our short option play is risk off. So whatever NVIDIA does, up or down, our long is going to catch it, but we don't have to manage that risk with the option position. And that is a huge benefit because nobody knows, not just what the news is going to be, but the bigger variable is how the market is going to interpret it. And with the 0 DTE strategy, we don't have to guess. So that's, I think, one of the most powerful things about the short dated strategies is overnight risk and weekend risk are something that you actually don't have to manage with the options portion of the strategy.
Okay, so that's, by the way, something I hear a lot from zero-day traders is they like that it's a closed book when the market finishes and the weekend too. It makes it very clean. It gives you that maneuverability. Tell me how you think about targeting a fund like this when there are a lot of people who are doing these things individually, but that takes a decent amount of work as well to be in the market slinging 0 DTEs. So is this kind of a way to provide that to folks who maybe don't have that expertise or they don't have the time, or what's kind of the target?
You nailed it. There's two huge things. It's a huge time investment to have to manage this throughout the day. And so having an ETF provider do it for you is one huge reason. And the expertise, like you need to know what you're doing, what to look for, because like early in my career, I've been on the sell side where I was looking at the wrong thing, and you can get bit and give back all of the earnings that you come through with options income if you end up having even one false day or one bad day. The second thing that I learned the hard way was I did this stuff when 0 DTE first came out in my individual brokerage account. And the tax implications with straddle rules and all of that world, I'm not an accountant, so talk to your own advisor. But that hurts because everything, not only the options premium income, but the capital growth of the underlying security that you're trading are both potentially going to be treated as ordinary income, short-term cap gain. But now translate that and you put it into the tax efficiency of an ETF.
Right, there's a tax advantage, right? You don't have to, because you're not constantly taking it off.
Night and day for two reasons. One, the options income is we're using SPX, which is index options, so 60-40 potentially. But the bigger thing is the capital growth of the underlying shares. If you do this in an individual brokerage account, straddle rules say you buy the shares and you're doing a hedge. Well, the capital gains clock potentially will pause on your underlying shares. So even if you hold it for more than a year and then you sell it for a capital gain, that's short-term stuff. Versus if you do it inside of an ETF because of in-kind redeems, when you sell a share of TDAQ 18 months later, the underlying shares of Q, they never get sold. They get handed back to the bank in kind. So the short-term categorization basically gets wiped away, and all you're paying as an ETF investor is deferred long-term capital gain. So that is a huge benefit where you can keep a lot more of the growth over time versus if you do this on your own.
Sai, is there or rather, let me frame it this way. How does this kind of play into, let's say, an investor who maybe has a big tech position, they are the beneficiary of a long rally, they've got something built up in here. Is this a way to kind of shift something into a more sort of automated position? Or how do I think about this if I already do have a bunch of big tech? It's kind of an addendum to maybe get a way to protect some of that, to kind of start generating something off of that?
Yes, exactly. The way some people describe it is they think about TDAQ as like it's owning the NASDAQ 100 with a paycheck. And it's a meaningful paycheck where you get all the exposure to the Qs and big tech. But then, we've done 2 distributions so far, so we're doing 17% tax efficient distributions. But then with the options piece, a covered call strategy by some definition is a hedge. So you can get some better risk adjusted returns and a little bit of downside protection with So you kind of get the core equity, but then you get these additional characteristics that come with it.
The folks that are kind of out saying, look, covered call strategies, oversimplify, or they're kind of blocky, is the zero DTE the counterpoint to say, okay, this is a much more nimble kind of version of that? If NVIDIA does obviously go berserk, we were talking, Brent and I, about the potential for a chase, kind of gamma chase, if this thing goes beyond the implied move of 6%. Those, in theory, would be the days in a traditional covered call strategy where you might be going, I wish I just owned the underlying outright. But tell me how your guys' strategy, I guess, kind of compensates to some degree for some of that with the zero DTEs.
That's the perfect example, actually, to talk through it. So you're right. If you had a 30-day strategy, you had a covered call that expires 30 days from now, and NVIDIA rips, you're going to get behind. It's really hard.
Everything's going to reprice way out for that far.
Precisely. And so you get behind the 8 ball real fast in a real big way. And that's the hardest part about 30-day strategies. But 0-day, because the earnings come actually after the trading day is over, 0-day strategies, you're risk off. So if it rips overnight and readjusts, you're happy because your long position is picking up, and then you can readjust and put your next day's trade at a higher strike price because you actually have that flexibility to move. That is a really powerful risk management tool where you're still rooting for the market to go up, especially after hours, because you're going to participate in the upside of that too.
Okay. By the way, I love when we can kind of see the scenarios and the hypotheticals. Bear market, I'm looking at your guys' fact sheet right now. Bear market outperforms, right? We know that one for sure. You're protected because you're generating income, so your returns are going to be better. Flat market, you're doing well here too because you're not losing anything on the call that you're selling. The bull rally is the one where you start to outperform. So 3 out of 4 scenarios, again, 75%. I love to think about odds. 75% of outcomes here, you're in a pretty good place. You're in a great place.
That's exactly right. And the trick to this whole thing, it's less about playing offense versus defense. Offense, it's less about what your option premiums are that you're collecting every day, as long as you're collecting net positive. It's defense. It's in that 25% of the time when things will go against you, having the right risk mitigation capabilities in place to react in order to sort of manage that downside. That is where this game is won and lost, is that last bucket. And we've seen it this year. Remember April, what a V curve, April 2nd to April 9th. You saw the downside, but April 9th, it went up 9.5% in 2 hours. And so that's kind of the Achilles heel of any covered call strategy, but particularly 0-day. We came out, with one of our other products. I had a lot of the competitors, but that day hurts. And that's one of the things that we've actually strengthened and hardened. Yep. Can you hear me okay?
There you go. Yeah, we got a little cut off there. No, I see your point, right? There's those types of sessions are, the other thing too that's important to realize is that those big moves are a rare thing. So the timing of it, kind of where you're at, also kind of has a role to play too, where if you miss those sessions where you get this massive bull rally, obviously, you could kind of time ETFs similarly to how you could time stocks, but to your point, generally most people are going to be fairly parked in this, you think? Is that kind of the idea? You buy and hold these?
That's exactly right. These are kind of built as buy and hold products. And this is kind of one of the big factors that really went into the design of the product. Part of this was, in my life, I was transitioning in my career. This was in October of 2022. Markets were down. I didn't want to have to sell my underlying shares to make ends meet, but I wanted to use it to generate income. And so that's exactly what I did. 0 days on my underlying security, which was SPY at the time. But the big thing was, if I had to sell SPY shares, imagine missing 2023 and 2024. You can't time that stuff, so you got to have your chips on the table. But guess what? You can have your chips on the table, get exposure to the underlying, and still get incremental income in a tax-efficient way. That's sort of the unique thing about this kind of strategy.
68 bips, definitely reasonably priced compared to what else I've seen in the category. Obviously, this category also is getting pretty busy, pretty crowded, Sai. How do you, we've talked about some of the edge that you've got on the 0DTE side. I kind of wondered, though, even when you think about some of the other concepts that have become popular, like a 351 exchange or something, there's a lot of ways people are trying to figure out what to do with their big tech holdings, basically, without, without getting out of them, right? These are all kind of solutions to have exposure without having to get out and to not have to take your capital gains hit too. Is that a major part of the pitch to advisors? And if the advisor says, okay, do I like this? Do they go to their client's portfolio and say, okay, a chunk of your tech holdings are going to go here, or do they start to layer into it as a new holding? Any idea kind of how they're approaching that?
Yeah, so when we were launching TDAC, one of the things that we wanted to do was a 351 exchange. The hard part, it's kind of a one-time thing. You can really only do it when you start a fund.
Right.
So for subsequent funds that are similarly exposed, we're going to go back because there was a lot of interest basically to get sort of concentrated positions into these kinds of holdings. The other thing that we actually did, so the other dynamic parameters, we built an underlying fintech that runs all of our ETFs. But that same fintech, we actually are able to take and point to SMAs. So if you have a large, low basis concentrated positions in NVIDIA, for example, we can take the same tech, put it on your concentrated position, your tax basis, and it'll run and harvest little bits of short-dated option premium and give it back to you as income. So one of the things that advisors are super interested in is, how do I deconstruct my single position? Well, if you generate options income on top, you can use that to pay the tax bill over time and start to diversify. So that's one of the things that planners are super interested in as a way to get out of those low basis concentrated positions.
Got it. Sai, thank you very much. Good stuff. Great to catch up. Appreciate the details on the fun conversation. Good timing too.
Great to see you, Oliver. Thanks for having me.
You got it. Sai Katara, founder and CEO at TappAlpha. TDAQ is the ticker. Markets are, let's see, pretty solid. Look at the SMH holding in at 340, up 2% real quick. Speaking of deep competition in the space, we'll be right back. Innovator Buffer Break is here. Scott Bauer is going to take us into the close. All right, we are back, and here's the context going into the last 15 minutes here. It's been red on Bitcoin on the risk radar, but it has been yellow on stocks, and it looks like they are holding in right now, crucially with the S&P 500 looking pretty decent right now. Gotta say, what's not to like here is stocks are looking pretty strong ahead of NVIDIA earnings tonight. Do like to see that. Scott Bauer joining me, CEO of Prosper Trading Academy. Scott, this is a pretty interesting market, man. Crypto's falling apart, but equities are just doing their thing. Make sure you're not muted there, Scott, because I'm pretty sure you're clean on my end. There he is. My guy.
All right, there you go. You got it?
What up, dude?
You got it now? All right, sorry about that.
You're good.
Yeah, I think the whole crypto narrative is kind of up in arms right now, right? It's supposed to be the ultimate risk off, and it's supposed to go to that when everything else is selling off, and here we are. It's not looking great, and there's a couple reasons for that. A, is it because we've seen so much about the big whales, people that have held crypto for years and years and years, liquidating? Is it really because of the Fed? I don't think it is. I don't think it's the interest rate narrative, because honestly, whether they cut in December or not, what's the difference, right? If they cut next year, there really is no difference. So I'm just looking at that as maybe people are looking at the equity markets and saying, you know what, maybe we're not overvalued. Maybe we haven't been to the top yet.
Yeah.
And people are looking to buy this dip and raising capital out of that. So your MSTR, still the gift that keeps on giving.
Crazy.
And, you know, it's at some point here, you know, I don't know when you're going to reverse that. You know, I don't know where the bottom is. Maybe it's soon, but we're certainly at a point that there's a lot of dire straits out there.
The chart to me for BTC yesterday, I said it looks like the support at 80,000 is the next clear one, at least from my perspective. You know, technically, doesn't necessarily think, I mean, we got to go down there, but if MicroStrategy just keeps getting obliterated, then who's to say we won't, you know?
Yep.
It's just, we broke that long-term trend line we talked about, and we're at 89 right now. However, if NVIDIA does great, I do think that stock market risk on has the power to kind of reinvigorate crypto a little bit.
Yeah, a little bit though, but I'm not sure what changes that narrative. And that was a severe break, Oliver. You know, we spent so much time talking about that 365-day line, which was, you know, right around the 100, 102 area. And boy, we know what happens about previous support once something is broken and broken as forcefully as this is. That now be the new risk. Look at, you know, 100, 101 now is big resistance.
Exactly. You know, that was also the corollary point. If 80,000 is support in the area of, and in the event of weakness, 100,000 now potentially resistance in the event of strength. So you're kind of trapped a little bit, you know, in coins right now. It seems like.
Oh, there's no doubt about it. And, you know, the history of crypto winter and all of that, much like other patterns that we saw in the equity markets this year that really didn't hold. You know, if you go back to what we saw beginning of the year, and then obviously Liberation Day, sell in May, go away. If you did that, you got really hurt. August, September, two worst, you know, months of the year. If you did that, you got hurt. We may see something different in Bitcoin this time also. Maybe the crypto winter is here now and we start to rally. But boy, I would say the fundamentals, more so than the technicals, look like you know what.
Yeah, not good. You know, Joel yesterday described it as Michael Saylor just dollar cost averaging down. It's kind of interesting to think about it from that perspective. This kind of heralded Bitcoin treasury, all this really fancy language that he likes to spend, but ultimately he's like kind of committing, like, I mean, I don't know, you know, if in a market that goes up, the whole point of dollar cost averaging in stocks is because it tells, you know, history that goes up, you make your nut, 7.5%, whatever, annually. To me, Bitcoin is still very much a nascent, you know, 10 years. Give me a break. That means nothing in the world of finance, you know, or what are we at, 12 now, I guess. So it's like, well, 15, I guess. All right, we'll give him 15.
Sorry. All right, we could do that. You know what else I wonder is how much the administration, I don't know, not following through, but the administration was so behind crypto, and now what's happened?
Zero, Scott. I mean, they never made that Bitcoin treasury, so. Oh, we might have lost Scotty there. Oh, no, he's back. I can see him moving.
Hey there, I'm back.
He's trying. Hey, there you go. Yeah.
I'm back.
There we go. Yeah,
So what I was saying is, how much of the crypto fall that we've seen is really about the administration as well? And I'm not making this political. I'm not saying this is good, bad, or indifferent, but we know how much in this administration behind crypto, doing everything it possibly could, at least that's what the crypto community thought, to just make things easy, to make this as mainstream as possible, and that's kind of gotten away a little bit.
It has. I'm going to pull up evidence for it right now, Scott, which is the Kalshi, will Trump create a national Bitcoin reserve this year? That thing is quickly on its way to zero. You know, that call is expiring worthless this year for sure.
I don't know how much of that is well, but I think there might be a good portion of that. And, you know, this is a totally separate issue, but if you can stocks in the cannabis industry, it's really the same thing. Came in, and there was a lot of belief that we were going to get some sort of and easing and anything at this point. And we're almost seeing a very, very similar type of reaction in the cannabis sector as we are with crypto over the last month or so.
Hopes of government regulation, not necessarily a very reliable bull case, I don't think so, or government adoption. The odds of Bitcoin being above 200,000 by 2027 are now just 20% on Kalshi. I think that one's pretty interesting too, Scott, because if you talk to, you know, any of the Sailor devotees, etc., Tom Lees of the world and such, Kathy Woods, etc., they're pretty convinced that the upside, you know, goes there. But the market's saying now just 20%. You know, it was upwards of 60% in October. I mean, that's a pretty big drop. You know, this is a big move on this bet on Kalshi.
You have to wonder at some point, with no disrespect whatsoever to Kathy Woods or Tom Lee, you have to wonder at some point is how much is that their book talking versus really what their technical or fundamental analysis is. Exactly. I mean, I agree with you on that. So, boy, I mean, I don't know. I can't even put an odds on it. I would take the under at 20% even. That's where it's at, you know, by the end of next year.
You know, I'm doing my best to not pull out to like the massive bear claw narrative on this, because the whole point of my bearish divergence is that I think that's how an effective Ponzi scheme would, you know, chart. Because we've never really had anything. We've had frauds, right? We've had companies that are frauds before, like an Enron, and what happens there is it just crashes when the information comes out. That chart is, falls off a cliff.
Not an entire sector or an entire asset class. I agree
with you know, like I would love to see what Bernie Madoff's chart looked like, because in my mind, a Ponzi scheme doesn't pop and crash. It just runs out of buyers, which is a slow rollover. And that's essentially what the bearish divergence, you know, shows in BTC. So that's just, and by the way, I was completely ready to say if it breaks out for months. I said, if it breaks my bearish divergence, then I rest, you know, I'm done. You guys win, I'm out. You know, but it's just still alive.
Yeah. I mean, at some point here, we probably do see a shift, but, you know, does that mean another 10%, 30%? I don't know. I really don't know, and I don't know what the catalyst behind, you know, but behind the buyers coming back in are, other than hope at this point, maybe.
Yeah, well, that's kind of where I do wonder if you get big risk on move in NVIDIA, does it just spur risk on across the board? But to your point, crypto still remains a good bit of a guessing game. Let's talk tonight, Scott. We have 5 minutes here, and then NVIDIA's coming out this afternoon. Tell me your 12 to 24-hour game plan here, how you're trading it, what you're thinking.
I don't think we're going to get a real big reaction out of NVIDIA. I really don't. If anything, maybe slightly on the positive side here. I think any dip buying, unless the guidance is just off the charts catastrophic, I think any dip buying is going to be met with any dip is going to be met with buying. But I would expect a smaller move. Right now the market's pricing in 8% move or so, 14, $15, somewhere around that area here.
Yeah.
I think it's going to be inside of that. And I think the market would actually like that if it was.
Some of the options traders certainly won't, though. If you're thinking there's going to be, if you got a strangle straddle or anything.
If you're buying a strangle straddle or something like that, no, you won't like that, because we all know we are going to see that premium get absolutely crushed tomorrow morning.
What makes you think that you fade the expected move here, Scott? You think that just the information has been telegraphed well enough for NVIDIA, or what?
I do, and I think that if we really see an outsized move, you have to start maybe thinking, what was Jensen Huang setting us up for? What's all the talks that he's had with the administration recently? And NVIDIA's put out a lot of good news recently, so I just think that a lot of that should be priced in. If I'm wrong, I'm wrong, but I would play the inside of it though.
Yeah. Okay. That's interesting. I also was talking with someone earlier who said that the kind of tone among larger managers that they work with has been reticent, and so he was saying that maybe a big rip could also be somewhat of a pain trade. I'm kind of always a little skeptical on that logic. I think it's kind of like a little overly fancy logic. I think that generally everybody likes when stocks go up mostly. But again, I'm sure there are people who would sort of be forced to chase a move where, I don't know, if we do get a market maker move, 6, 7, 8%, that if we exceed that move, then I don't know, maybe Friday you get, the chase, the rally is on or something.
And where you might see it is the chase on with a lot of these AI stocks that have just gotten completely obliterated. That's where the chase might be, because if we have some of those trailers that really are trading off of NVIDIA guidance, NVIDIA outlook, those are the ones that are so heavily shorted at this time where you can really start seeing some squeezes.
Yeah. Thinking about the potential then for the broader market, the ramifications, Scott, if NVIDIA goes well, or let's say it goes according to what you think is most likely, let's say it stays within the expected range, how do you think the S&P then is set up for the weekend and into Thanksgiving next week?
I think we're actually set up pretty well here. I mean, even in the heat of the sell-off yesterday and over the last few days or so, we saw the VIX pop. It never got above 24, 25. That's pretty telltale to me that even though there might be some very short-term concerns, that longer than that, I'm going to say not that the concerns are overrated, but the market is really kind of pricing in some choppiness in the near run, which doesn't mean that we still can't have a nice rally into the end of the year or into the first quarter.
Yeah. All right. If we do, where do you think that could take us? What kind of levels? We're at 66.42 right now, which I've got a line on my chart. Looks like it's been support. If that holds,
it has.
What do you think? We're talking new highs maybe by Thanksgiving? Going to sit around the table with the fam and celebrate all-time records?
I would honestly not like to see new highs by Thanksgiving, and people are going to start throwing tomatoes at the screen and say, why not? And I said, because that's too quick. I would love to see some high volume, some conviction, and more of a methodical move to new highs than a short chasing rally that then may have some issues. So I would much rather see us move S&P's 25, 30 points a day rather than see a rip higher 100, 200 points. That's just me. I think that would be healthier for the market in the long run.
Yeah. All right. Look, it seems like we might have something to talk about with the fam next week. I think that tonight's going to be fun. There's the bell. Scott, thank you very much, sir. Always a pleasure. Nice prep. Looking for NVIDIA to maybe hold within a range and squeeze out some of the speculators a little bit. Kind of seems like that's right. That's the play.
We'll see what happens.
All right. Yeah, thank you, sir, very much. Appreciate it. Scott Bauer, the one and only CEO of Prosper Trading Academy, joining us from sunny Colorado. At least the backdrop. I'm going to pretend you're in Colorado. I know you're in Florida last week. Thanks, Scott. Appreciate it, man. All right, that's it. We're done for the day. Bell just rang. Stocks held in. Pretty darn good session ahead of NVIDIA. We'll see what happens tomorrow. Good luck tonight.